What's going on, y'all? I realized I need to do a part 2 on this how to read a Forex chart video because there were some things that I forgot to mention in the first one. So we're going to talk about 4 more things that you'll need to know when it comes to reading a Forex chart. The first one, which I have discussed a little bit, but I want to go over it again because there's a lot of confusion on this particular subject, and that's how to count pips. If I take this tool and I go from here to here, and I'm going to zoom the screen in here, but look at the 622 in the middle. That number in the middle talks about your pip count. That is not 622 pips. Most Forex brokers have, they calculate the market in fractional pips. And so that last 2 is basically like a decimal. So look at that as 62.2 pips. Or if I were to scroll up and do this, that's not 1,577 pips. That last 7 is a decimal. So that's 157.7 pips, or I would just say 157 pips, even though it's closer to 158, but that's just to keep it simple. Whatever those first 3 numbers are, or here, you know, if I do like that, that's 15 pips. This is 1 pip, you know. So just, that's the first thing, just throwing that out. All right, moving on to the next thing. The next thing we're going to talk about is swap. Swap is what happens at the end of the day. If you're still in a trade, you get charged what's called a swap fee. So let's go, and what you would do is to see what the swap fees differ on each pair. So to see what the swap fees are, you can right click on a pair. So we'll right click on EU and go to specification. When I get to specification, I scroll down a little bit and you see this right here, swap long and swap short. What these mean, so long means you're in a buy, short means you're in a sell. If at the end of the day, you're still in an active trade, you haven't gotten out of the trade, you're just letting it ride. And let's say you're in a buy or a long, on EU, you would get charged 56 cents for every standard lot that you're in. So this is relative to your lot size. That's 56 cents for every $10 per pip. So for example, if you were only risking $1 per pip on that same trade instead of 56 cents, then it would be 5.6 cents. So it's all relative to your lot size. So all the swaps again are per standard lot, which a standard lot is a 1.00, which is $10 per pip. Same for short. If you're in a short, then you would get charged a lot less. You would only get charged 6 cents per standard lot. Some of these are actually positive. There are some situations where your swap can give you more money. It's rare, but I mean, there are some pairs that work that way. Let's just look at one more just to give you so again, right click, go to specification, scroll down. So on UC or USD CAD, if you're in a long or a buy, then you only get charged 30 cents per, You only get charged 30 cents per standard lot, but then you're charged $6.70 per sale that you're in per standard lot. So, and that's again, basically when the clock hits 4 o'clock down here, because I'm Central Time, so that's the end of my trading day, would be 4 p.m. Central Time for me. If I'm in an active trade on UC, when this thing goes from 3:59 to 4 p.m., then that swap's going to show up. The other thing you need to know about the end of the day is the spread. So right now, the spread is only 1 pip because 24 to 25, that's 1 pip difference. The spread is, you really don't want to be getting into a trade. That's why I say don't trade at the very beginning of the day, like 4 p.m. Or when the trading day opens at 5 p.m. Eastern. You don't want to be in a trade because the spread is going to get a lot bigger. Instead of 1 pip, you can see spreads as high as 20 pips during the market open. So not a good time to be in the market right there. So that's a little bit talking about what swap is, and also just keep in mind the spread gets ridiculous for the first hour of each trading day. Okay, these are two terms that you need to know, bullish and bearish. Let me just do this here. So, and this is what I'm saying, just so you know. You need to know bullish and bearish. Trying to type with one hand. Bullish, just how I was telling you, like when we were talking about swaps and I said long means a buy. Well, bullish means up, or the market's going up. If I say we're in a bullish market, then that means the trend of that particular pair, if it's bullish, then it's going up. The trend is up. If the trend is bearish, that just means it's going down. Or if I say I need a bullish candle or a bearish candle, a bullish candle, there's all the green candles, because all the green candles ended higher than what they started. All the red candles ended lower than what they started. So the red candles would be bearish. So that's all bullish and bearish is. Bullish is up, bearish is down. You'll hear those terms quite a bit, and there are times where I just use them without thinking about it. And I just want you to know what that means. If I say, yeah, I need a bullish candle right here, or a bearish candle, whatever the case may be, I'm just talking about up and down. And the last thing is I just want to go over in more detail what moving averages are. I noticed in my last video, I corrected myself. I said EMA, and then I corrected myself and just said moving average, which the reason I did that is because I remembered right then, crap, I haven't explained exponential moving averages versus simple moving averages. And so when I initially said EMA, the E stands for exponential. I just need you to know, honestly, it ain't that important, but I just want you to know what it means, because I normally will say EMA or SMA. But in general, a simple moving average gives you the legit average of where price is. So let me go to all right, so these are actually simple. This is the other template that I gave you. This red, gold, the blue, and the green line, those are all simple moving averages. So for example, the green is a 33 moving average. So that's the legit average of the last 33 candles where price would be. And that's a simple moving average. So that's a legit average versus, go to my other broker. So over here on this template, which is my main template, this is, these are all exponential moving averages. These give a little bit more weight to the most current candles. So that's really the only difference. The simple moving average is the legit average. An exponential moving average gives a little more weight to the most current data. That's all. So when I say EMA, I'm talking about exponential. I'm talking about these right here, these moving averages. If I say SMA, I'm talking about these right here, the red, yellow, blue, and green. The white one is still an exponential one, the same one that you have on the other template, but these four are SMA. So I just want you to know, if I'm saying SMA versus EMA, that's all I'm talking about. Just know I'm talking about this template versus, the moving averages on this template. That's it. So I just forgot to bring those things up. Wanted to make sure that you were caught up to speed on that stuff, because I might say certain terminology and I want you to be, able to understand what I'm talking about. All right.